Hi friends, an amazing week everyone. How are you? How was your weekend? Well, a quiet week was ahead of us because of Bernanke's expectations, and the expectations never lied. And exactly what the market expected happened. Bernanke is committed, is proven to be committed to his QE number 2 HAL program, and he said that it will continue until June as expected. Means we have still have one more month, little more than one more month to for the U.S. weakness, U.S. dollar weakness. What is going to happen then? Only Bernanke will say, and the market will probably get ready for the next announcement. Until then, we will probably continue to see dollar weakness. Will it be straight? No. It will be with correction, with zigzag moves, but the direction is pretty clear just right now. So welcome to my weekly review, friends. First week of May, the 1st of May 2011. Well, what actually can we expect for? What can we look for? There are pretty several good opportunities, and after we have had mainly intraday trading on live trading room on the previous week, that was concentrated on the yen pairs, such as the dollar yen, New Zealand yen, Australian yen. At the beginning of the week, long side. At the second part of the week after Bernanke, short side. Well, that's the expectation. That's what we took. We had also one loss with dollar Canadian. We just did a zigzag, but still looks like selling, and a one false break on the euro franc. So pretty much nice week for winners to losers, and pretty much quiet week around break even with little profits. That's all we have had for this week. Probably we will get much more, and that's what I want you to see. Please follow passionately and steady, because very important things probably will happen during this week. Of course, just right now that it is an expectation. I never know how the market will open actually, but if if it will be changed, of course you will have an update on the blog. But as for now, and this is what I am looking for. Euro dollar. That's the first I want to start with. We have 149. The resistance actually holding this area. We have kind of divergence, growing divergence, and continuing divergence just right here. A cross of stochastic down move on the RSI, and kind of double doji, maybe two inverted hammers, two small inverted hammers. Let's go for the 4-hour chart, and that's how we will join this move. First of all, that's the uptrend line just right here, right? We have this 20 moving average of the Bollinger Bands as a support, as potential support as well. The breakdown of this and a quick retest of this uptrend line should lead for the sell opportunity, and the sell opportunity should take us at least to 146 from my point of view. It's a little higher actually. This is the support, 146.40, something like that. That's the support line, right? This is the support line just right here. So that's the expectation with the break. For the long move, let's wait patiently for a close above 149. That will be the only signal to buy from my point of view. Until then, I guess we are about to have a good correction there. What about the Euro British Pound? Another pair I was looking for, and we were concentrating on our live trading room. We talked about a potential down break for this beautiful situation here. It's a wedge, by the way, and the wedge should take us down for the down move. I do expect for the Euro British Pound to continue down. But before we explain on the 4-hour chart, see what is happening on the daily chart. Double top here, just a double tap here with a divergence, with a beautiful divergence just right here, and that's a good situation. Is it 100% guaranteed? Unfortunately, no, because of the weekly, unexplained from my point of view, RSI positive slab. I don't know how, but that's actually what happening here. Means that the bearish power is not so clear. Is it worth to take the down move? Of course it is. And now let's go for the down for the 4-hour charts once again. The uptrend line is broken. The Bollinger Bands is trying to be opened, right? And the RSI looks like crossing down. Well, we still have this support line just right here that held it a few times, right? 88.45. So we break below it will lead us for a selling, for a sell. And then if it breaks, I believe we will go 100 pips down lower for the next support around 087.50. We could even look for a lower, but that would be the beginning actually. So that's my expectation from the Euro British Pound. For conservative mode, wait for a close below 088.50, 45 actually. For an aggressive mode, enter just right now with a stop above 085.40, 089.40, sorry, and based on the daily chart actually, and look for the lower level 087.50, 087.40 of this double top. I think we are about to have a down move here. What about the next pair? Australian New Zealandian, another interesting pair. Why? First of all, we have a downtrend just right here being tested, right? Just from the highs being tested. Now we have a block. We still don't have an RSI cross. And the slope of the MACD is rising despite of the Harami pattern. That means cautious. Be cautious. Stay cautious. On the 4-hour chart, we have had, well, that's what was explained actually on the live trading room. We have had, Gerard, this was yours, so thank you, my friend. It was your trade. We have had a close below 135.65 and a ride all the way for the 20 moving average. Actually, the close support. That's the first target. And now we are blocked on the support and on the 20 moving average of the Bollinger Band, and potential hidden divergence being created here soon. So it's not a situation I like to see. I don't like to stay bearish in such situation. I prefer to close 80%, maybe to let the 20% running, but 20% have to close in this situation, just to promise the profits. So I'm not sure for the Australian New Zealand as for now, because there are confusing situations from the 4 hours to the daily chart. The next pair would be dollar Canadian, which is probably continue down 0.92. Well, the investors are aiming long down move actually. It looks like very possible. We had a close below 0.9470, and the 4-hour chart's support actually was broken here, as you can see. So a quick retest for 0.9465, 60 maybe, should lead a down move. A stop loss should be placed above 0.9510. Somewhere, I would place even above 195.30 once again to protect these levels. And the first target should be, from my point of view, at least this duplication of this sideways move, right? So that's my expectations from the dollar Canadian. The next one is the Australian dollar. I was talking not once about 110 levels, level actually 110 area. We are getting closer and closer to this area. The divergence could be completed just right there on 110. It's very psychological level. My bet is that this pair will drop from there, at least for this uptrend line that begins all the way back just right here, right? With one false attempt to break. Maybe it could be even deeper and take us all the way for the next line, which is just right here. So I do believe 110 will hold, and I will look to sell there. How to look to sell there? Aggressive mode with a bearish candle around this level, stop loss just above 110, and the first target would be the uptrend line that I was mentioned before. The second would be the deeper, the longer uptrend line. The New Zealandian, the same situation. Well, we have 082 as a first target, but 081 is a resistance also, just right here, as you can see. 081 it is. Will we have a correction just from here? Possible. If we take a look on the 4-hour chart, possible as well. We have the divergence still here. So let's follow. The New Zealandian is less clearer from my point of view than the Australian, but let's follow and see how it actually behaves. 089, 081, sorry, and 082. These are the levels for a beautiful potential retracement. The dollar yen, well, to be honest, I don't know how to have this pair, because it did close below the support line. It looks bearish. Also the Bollinger Bands confirmed down move, but the 4-hour chart still has its actually divergence, bullish divergence just right here. So I don't know how to eat this one. I don't know. It looks bearish, but I wouldn't bet my regular risk for this pair. I would put maybe half risk. So if I risk usually 10%, for example, 2%, sorry, for example, per trade, just for example. So now I will have 1% because it looks riskier, and the target actually could be around 80.40, but and the stop loss should be placed above 81.70 actually. So it's a little riskier, but maybe it's worth it. I don't know. But if you take it just with lower risks. What else? Dollar Canadian I've talked about. Now let's watch some interesting, one more interesting pair. Actually, no, it's not a pair. It's the indices. I've talked previous week that I am bullish, and I am still bullish for 1370 and 1380 and 1390 as next levels. This is the steps I want to examine and to test, and from there we will probably have a potential stop just right here, right? So let's follow and see how it behaves. I'm still bearish, by the way. Once again, 1370, 1380, 1390 are the levels. If those are broken, then 1430 would be the next one. Well, that's all, friends. Many potential trades, many beautiful trades. Now you know the levels, you know how to treat the market, how to enter these trades, and how to follow them. I just want to wish you good luck, and thank you very much for your time watching this video, and once again, thank you very much for all the support emails you send me. I never can be more happier to know that you profit with these reviews and you make money with my analyzing. Thank you very much, friends. Once again, I wish you amazing week. Vladimir.